So, uh, when a family has an event, monetization or sale of business, and somebody hands you 50, $75 million to invest for the rest of their lives and for their family, at this point in the marketplace, we feel that most things are quite expensive. Equities are expensive, and fixed income is very expensive. Well, certainly the Fed easing and keeping rates very low have forced people to buy risk assets. And you'll see that last year, for example, earnings were up approximately 6.5%. Market was up, by the S&P standards, about 29.5%. That can't continue for a very long time. And most of that was comprised of PE expansion. And even on the earnings side, most of that has been derived from the bottom line, expense cutting. There's no real top-line growth. There's no pricing power yet. That's not come into play yet. Now, I do see it improving over time. It's going to take a long time. It took us a long time to get into the situation we're in. The issue really is, how long will it take us to create a more realistic value of fixed income and equities? Bonds are certainly public debt. It's not quite a bubble, but it's just very expensive. And I think the same thing for equities. I don't want to say stocks are in a bubble yet. I'm sure there are pockets of the market that one could argue are very expensive. I think overall, it's just quite frothy now. And so, to the earlier point, putting a lot of money to work, or all the money to work at one time, would be very difficult today. There are some things to venture towards, but not a lot.